Good day, great people. Happy Tuesday. I would like to welcome you back to my YouTube channel, Real Estate. What do I need to know? We will be discussing the different type of loans, and today we'll talk about the FHA 203K loan, which I mentioned last week. Now, for those that do not know who I am, my name is Belinda.Bedford, and I am a realtor with Exp Realty. Now, I have a quick disclaimer. I am not a lender or a mortgage broker, so this is not my area of expertise. I am just here to shed some light on the different types of loans that are available to give you some options when you're on your home buying journey. All right, so let's jump right into it. The 203K loan is a subtype of the popular FHA loan. Sometimes it is called the Rehab loan or the FHA construction loan. You may have heard it called either one of those. Now, FHA's flexibility makes qualifying for the 203K loan easier than for a typical renovation loan. This particular type of loan can be used to purchase 1 through 4 family homes or homes that have been torn down with some foundation still intact. But you would consider those, I guess, inhabitable to some degree. Now, you can assume this type of loan that will allow you to purchase and rehab the property, all with one affordable mortgage, so you can look at this as a loan for fixer-uppers, perhaps. You can also build thousands of dollars in additional equity in just a short time by making minor improvements with this property. The FHA allows credit scores as low as 580, but most lenders are going to want to see credit scores of 620 to about 640 in order to qualify. This still is much lower than the 720 or higher credit score you will probably need to qualify for a conventional construction loan, which we will talk about later on in this series. So with this being an FHA loan, the minimum down payment is going to be 3.5%, and it's based on the purchase price of the total project cost. For instance, you guys, if the home price is $200,000, the total project cost is $25,000, then you're looking at an overall price of $225,000, right? So you will be looking at a down payment of about $7,875. See, I did the math for you guys. Now, you can receive 100% of your down payment requirement via a gift from family or an approved nonprofit organization, which some people got it like that, and that's great. I don't, but if you do, hey, hit me up. And so some lenders, of course, all lenders, of course, are going to want to examine your debt to income ratio, no matter what type of loan this is. And this is a comparison of your monthly income and debt payments. Now, typically, less than 43% of your income should go towards the proposed mortgage payment, plus all other debts. So, for example, if your income is about $5,000 per month, your future house payment plus auto loan payments, student loan payments, and credit card bills should not exceed $2,150 per month. Did the math for y'all again. See, I'm on it. All right, and so you can borrow up to 110% of the property's proposed value or the home price plus renovation costs, whichever is the least. And keep in mind that your total loan amount cannot be higher than your region's FHA loan limits, which each county has set limits that you would not be able to exceed, and your lender, of course, will advise you of that. Now let's talk occupancy. You must plan to live in the property that you are buying. If you plan to fix and flip as an investment property, the 203K loan is not the right loan for you. So no Airbnb with this. And then as far as citizenship go, FHA loans are available to U.S. citizens and lawful permanent residents. Lenders, of course, will verify the citizenship at the time of the application. So they'll catch that right away. And not every mortgage lender originates the 203K loan, and not every loan officer or mortgage broker even understands this process. So you want to make sure that you work with a company that is approved to do this kind of loan and does a lot of them. So if you do not have a lender that does this type of loan and you are interested, then please go ahead and reach out to me, and I'll be sure to get you connected to one of my preferred lenders. And we'll get you a consultation. Now, with mortgage rates, mortgage rates are higher with the FHA 203K loan than the standard FHA loan. So expect to receive a rate about 0.75% to 1% higher for the standard than the standard FHA loan. Still, FHA rates are some of the lowest on the market, so the 203K rates are competitive, okay? And you may also pay FHA mortgage insurance, which we'll get into a little bit later in this series, but this costs about 0.75% of the full loan amount as a lump sum, and it can usually be rolled into the loan, and 0.85% yearly. This is broken into 12 equal monthly payments. So example for that, mortgage insurance, if the loan is $250,000, that's about $43.75 and about $177 per month. Did the math again, see? And there are two types of the 203K loan. Which one you choose depends on the extent of the repair work. So you do have the limited 203K mortgage, and this option allows you to do mostly cosmetic repairs. For example, things like kitchens, bathrooms, appliance replacements, carpet and flooring, etc. Now, the second type of loan is the standard rehab loan, which this one allows you to do just about anything you want to do to the home except for non-permanent changes and adding luxury amenities. So example, any type of structural alterations, converting a single family home into a 2, 3, or 4 unit home, or vice versa, connecting to public sewer or water, etc. Excuse me, you guys. And the things that you cannot do, although the FHA 203K guidelines, are fairly lenient, there are some things that you cannot use the rehab plans for. For example, minor landscaping. Come on now. Adding luxury amenities like a tennis court or a barbecue area or a swimming pool, or projects that take longer than 6 months. In this case, some other options might be a better fit after purchase, such as the home equity loan, a HELOC loan, Fannie Mae home-style mortgage, or a cash refinance, which we'll touch base on these later on in this series. I am delighted that you guys have come back to visit me, and I hope that you keep coming to see me here. I love you guys. I just want to educate you on all of your options so together we can crush your real estate goals. And we're going to do this again, same time next week. We will talk about the conventional loans, so remember to stay tuned. I want you to follow me on IG and Facebook at keys-to-the-city_ATL. And don't forget to like, comment, and subscribe. Have a good night, you guys.